Good morning, guys. It's Thursday, November 21st, 5:24 a.m. Central Time. Grain markets are marginally higher this morning. December corn futures up 1.5 at 431 and 3/4. January soybeans up 7 3/4 at 998 1/4. December Chicago wheat up 4 1/4 at 556 3/4. December Kansas City wheat up 3 1/4 at 565. December spring wheat up 2 3/4 at 594 3/4. Let's start off with the big Brazil-China ag agreement.
So, China has agreed to receive Brazilian sorghum exports. Last year, China imported $1.83 billion worth of sorghum, with the majority of the commodity coming from the U.S. The agreement between China and Brazil could potentially have a significant impact on the U.S. sorghum market, as 94% of total U.S. sorghum exports went to China last year. Additionally, China's approval could transform Brazil into a major supplier for sorghum, given the likelihood that Donald Trump will impose tariffs on China. Brazil currently holds about 0.3% of the total global sorghum market. In the last 3 years, Brazil's sorghum production has doubled to 4.4 million metric tons.
So this is the big agreement that you guys were all terrified of hearing about, and it turned out to be a nothing burger, as they say. China and Brazil already have agreements in place with regard to corn and soybeans, and now they have one with sorghum. Let's look at a couple statistics here. Brazil does grow some sorghum. Sorghum is a tiny, tiny market. We don't ever talk about it really, but we have some subscribers, I'm sure, that are listening and watching that grow sorghum. The U.S. is the king of sorghum. We produce the most, but Brazil is a not so distant third. When it comes to exports, however, Brazil has virtually zero exportable supplies, and the United States accounts for 56% of all global sorghum exports. So while this sounds nice, Brazil has nothing in regard to sorghum that they can export to China. Maybe they try to shift something around, try to grow more, try to use less domestically. But for right now, this is just, it's absolutely nothing. China, of course, is the largest sorghum importer, accounting for 88% of all imports. So I think that I don't know what's going to happen on the trade front, but China, if they're going to import sorghum, I think is going to need to still come to the U.S. because Brazil has no exportable supplies. So this was supposed to be a scary headline that we were going to hear about, this big trade deal. And there were some other things that they announced here other than just sorghum. They struck 40 cooperation agreements in economic sectors, from farming and solar power to communications and nuclear energy. I mean, they're getting tighter, Brazil and China, but a lot of this just goes back to what I mentioned yesterday, I think. Does any of this do anything to add or subtract bushels from the global balance sheet? And the answer is no, it does not. If there's going to be a shift in global trade flows, and Brazil is going to start shipping more to China, that may just mean, again, a game of musical chairs, and some of your other global buyers may have to come to the United States. So I see this as being a whole lot of nothing, honestly.
Corn futures have been resilient. The nearby December 24 contract was able to shrug off a lower trade yesterday prior to finishing the day with marginal gains. Demand has been excellent. Export sales continue to run well above the pace needed to hit USDA projections, while ethanol production has been hovering near record levels for several weeks. Large money managers are estimated to hold a net long of about 114,000 contracts at Wednesday's close. Calendar spreads have been curiously strong, perhaps as a result of better than expected demand.
You've got this big base of technical resistance above the market at about 435 December futures. We'll be rolling to the March contract here pretty soon. It's acted very well. Demand is great. Export sales have been fantastic. We'll talk about ethanol production here in a second. That's been very good. And everybody's bearish for some reason. On a side note, I sent out a cash grain recommendation to our premium subscribers a day or two ago, and it was a target order that I advised be worked above the market. And you know what the response I got back was? It was Joe, you can't be that bullish. Why are you bullish? The market's going lower. Well, are you really that optimistic? And it's like, I wasn't even that far above the market. So, I mean, I'm often accused of being a perma bear. Who's the perma
Yeah.
bear now, guys? I mean, seriously, you guys are so negative. Jesus. In any case, it's acted really well. The rally in the spreads is even more curious, I think. And this is something this was not what was supposed to happen. The narrowing of these calendar spreads is not what was supposed to happen. I think this probably caught people more off guard than the big short covering event and the flat price rally. That sort of stuff happens, but these spreads weren't supposed to narrow, in air quotes, as they did. And this implies strength in demand. I think demand has just been better than expected, generally speaking. So it looks good. Soybeans have been a drag, and the bean market has not acted very well. And if it wasn't for this big burdensome supply situation in soybeans, I think corn would be acting even better than it already is.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Brian Split was on yesterday. We did charts, corn, soybeans, wheat, cattle, feeder cattle. Brian does a deep dive and dissection into all of these charts. These videos are usually about half an hour long and provide some excellent perspective. Has really helped us out a lot over the last couple of years with these chart videos. Chris Barron was on Tuesday. Farm Budget Mailbag ran through a whole bunch of questions from premium subscribers about farm budgeting, everything from rents to fertilizer to labor, equipment, how to cut costs, what people are doing across the country to help to improve their budgeting situation. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel it anytime. No other fee, no other obligation. Nobody will try to sell you anything else. We just want to charge you $50 and send you our info. That's it. There's no upsell. There's no hidden fees, nothing like that. It takes about 30 seconds to sign up. You can do it on your phone. You just need a credit card. We do Apple Pay, Google Pay, Cash App, all that stuff. All of my cash grain marketing recommendations are included. You got our morning email at 5 a.m. Central Time. That includes everything. It includes the headlines, the videos, the cash grain recs, a whole bunch of charts and graphics. Give that deal a shot this morning, guys.
U.S. ethanol production declined slightly last week, but was record high for the week. Weekly output of 1.11 million barrels per day was down marginally on the week, but up 6% compared to the same week last year. Ethanol stocks were pegged at 22.56 million barrels. The print was up 2.4% compared to the previous week and up 7.7% versus the same week last year. Implied gasoline demand was down 10% compared to the prior week and down 5.9% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is down 1% compared to the same period last year.
This is fantastic. Ethanol production marketing year to date, if you're looking at the corn marketing year, is running close to 4% above the same period last year. And USDA on their corn balance sheet is projecting that corn demand via ethanol will actually be reduced this year, just marginally. So you could make the argument that we've got an additional 100 million, maybe 200 million bushels of demand that needs to be penciled into the balance sheet. Now, as with export sales, a lot of people think that this pace is not sustainable. Production margins have backed off a little bit, but I'll tell you what, this looks awfully good, and export sales look awfully good. And to go back to the price strength in corn, this and the export sales, I think, are the reason why.
Russia's wheat production is slated to decline next year as farmers switch to more profitable crops. After a year of major crop losses, farmers are turning from wheat to more profitable crops like soybeans and sunflowers. Frosts and drought damaged this year's wheat crop, which is projected to decline to 83 million metric tons, down from 92.8 million metric tons last season. In addition to reduced yields, farmers' profit margins have been squeezed by increased input costs. In recent months, Russia has been exporting wheat at a near record pace. However, exports are expected to decline because of the poor wheat harvest and the implementation of export restrictions aimed at controlling domestic prices.
So this is a lower crop estimate, but this is exactly, or actually slightly above what USDA has penciled in. USDA's got the Russian wheat crop at 81 and a half. So the government here in the U.S. has already acknowledged that wheat production is going to be down. Russia still, even with that reduced production number, will still in all likelihood be the largest wheat exporter. And that, of course, is assuming that we don't break out into World War III sometime in the next 2 months, which I don't know. The markets don't appear to think that that's the case, but there's definitely some heightened geopolitical risk here the last couple of weeks.
John Deere's fourth quarter earnings are expected to be the lowest since 2020. The company's adjusted earnings per share are estimated at $3.87 for the quarter, down from $8.26 last year. Net income for the upcoming fiscal year could fall to $5.8 billion, down from the expected $7 billion this year. Deere's declining profits, like those of other farm equipment makers, are due to the weak farm economy. During the month of October, U.S. sales of ag tractors declined by roughly 14% compared to last year, and sales of combines declined by nearly 35%.
I believe the earnings are out at 9 or 10 a.m. this morning, Central Time. The Deere stock has acted okay. It's pretty much flat year to date, which is underperforming the broader stock market, of course. But relative to other companies in the ag sector, maybe they're doing okay. Anecdotally, we know that the equipment market is in big trouble. Used equipment in particular has seen big time problems, and new equipment sales are down also. So we'll be curious to see what they say here in a few hours.
USDA reported 2 flash sales of soybeans on Wednesday. U.S. exporters sold 7 million bushels of beans to China and 8 million bushels of beans to unknown destinations for delivery during the current marketing year.
China's still buying soybeans, and make no mistake, China has more beans on the books than anybody with regard to U.S. export sales. The question moving forward is, do they continue to buy soybeans, and do they cancel some of what they have purchased if the Brazilian crop is big enough? And for the moment, Brazilian weather is a non-issue. They've got rain in the forecast. They've caught rains. There's just not any weather threat to speak of. What did cattle do yesterday?
Cattle futures were narrowly mixed. Live cattle were 27 cents lower to 27 cents higher. Feeders were 5 cents to 55 cents higher. Box beef was lower. Choice ended the day at 306.39. That was down 240. Select ended the day at 270.99. That was down 92 cents.
Outside markets, a little bit of movement this morning. U.S. dollars flat. Stocks are up a little bit. Bonds are about flat. Gold's up $23. Crude oil's up $1.32 in the January WTI at 70.07. Bitcoin's trading 98,000 this morning. I know you guys love to hate it, but I had to mention it. Have a great day. We'll be back on Friday.